Hi, Mr. Anthony. Xiaoqin here, and today I'll be presenting on the fundamental analysis of Qualitative Limited. Starting off with the introduction, Qualitative Limited was founded in 1961 and is based in Singapore, which operates as an investment company here. And the business segment involves investment, a chain of hotels, gaming such as casino betting activities, and it also engages in the development of land and properties, and also as a royalty interest in the oil and gas production sectors. Next, I'll be moving on to the quantitative analysis. Let me start off with the market capitalization. As we can see from this chart, the current market cap is 948.1 million US dollars, and from this chart, it shows that the market cap declined drastically during 2011 and 2012 and started to increase again from 2013 to 2014 until reach the current market cap. Whereas the second diagram shows that Qualitative Limited is doing much better than some of its competitors in terms of the market capitalization in the same industry. Next, I'm going to talk about the cash flow statement. So this is actually the annual cash flow statement of Qualitative Limited. And from the table, we can see that the cash flow balance was gradually decreasing during the past few years, from the highest, which was 40 million US dollars, to the current, which was only 18 million US dollars. So the decrease in the trend is caused by the increase in the creditors, and also the company maybe has been spending more on purchasing new facilities and equities in order to improve their their productions and options. Furthermore, from the statistic analysis and this chart, it shows that Qualitative Limited is actually underperformed as compared to some of its competitors in terms of the cash flow statement. However, it still has a favorable financial health in terms of these positive figures, positive cash flow figures. So next, I will be talking about the profit margin. This table also shows the annual net profit margin of this company, and as we can see, that the current profit margin is only around 10.26%, and it also shows a decreasing trend throughout the years. So the decrease in the profit margin is actually resulted from the increase in selling, increase in general and administrative costs. As such, the net margins of Qualitative is actually ranked lower than 56% of its competitors companies in the global asset management industry. It also signals that Qualitative Limited is actually underperformed among its competitors in terms of the net profit margin. So next, I'm going to talk about the earning per share. As we can see from this diagram, it shows that the current earning per share is only 3 cents as of March 2014. This actually shows that Qualitative is currently offering a lower earning rate other than its competitors, which can be found in the pyramid, it shows that Qualitative Limited is at the bottom of the pyramid. Next is the P ratio. The P ratio of Qualitative company is 23.53 times currently, and it can be considered as a higher P ratio, and as we can see from this diagram, although the P ratio of other calculator almost has the highest P ratio among its competitors, it still operates in between the average of P ratios, which is only 20 to 25 times. This is actually a good sign. Shows that investors are willing to pay more for each unit of the profit that generated from the company. Next is the quick ratio. Um, from the diagram, we can see that the quick ratio has been decreasing from 2013 into the current quick ratio, which is only 0.7. So from the statistic and this diagram, we can interpret that this company has a relatively low position than its competitors in terms of the quick ratio. So this actually shows that the company's ability of covering its short-term debt is getting worse. Next is the return on equity. Um, from the chart, we can see that the movement of the return on equity is actually fluctuate drastically, and the current return on equity is even negative. So overall, currently the ROE is not as desirable as competitors because of the negative figure. So this actually shows that the shareholders the shareholders are losing money because of the negative ROE. Next is the return on assets. As we can see from the diagram, the return on assets, the movement of return on assets is somewhere similar with the return on equity, which is having a decreasing trend currently. So this decreasing trend shows that the profitability of this company is currently deteriorating. Last but not least is the debt to equity ratio. Um, from the from the chart, it shows that the debt to equity ratio of this company is also decreasing, and the current debt to equity ratio is only 0.1. So the low debt to equity ratio shows that good collateral is not taking enough advantages from trading on its equities. Next, I will be moving on to the qualitative analysis. So on the qualitative analysis, I will be use the SWOT analysis to elaborate more about the company. So start off with the strengths. Unlike other similar companies, Qualitative actually has reduced labor costs and a more skilled workforce other than its competitors. As such, with a high growth rate, it actually signals that Qualitative is going to perform well in the future, perform well and better than its competitors in the future. The weaknesses that the foreclosure is facing is that it might be affected because of the high loan rates provided by banks and other financial institutions. As such, it will be influenced by the future competitions and tax structures. As we know that agriculture has a lot of operations in many other countries such as UK, Australia, Malaysia, and so on. So each of the countries actually applied their own tax structures. So the operation of agriculture will be somehow affected because of the different tax structures and different tax and different and the foreign competitions in other countries as well. Next is the opportunity. Um, corporations actually be able to take advantages from its customers because there is a currently a constant increase in the income level of there's a constant increase in the income level of the household, plus the growing demand from the customers, and also the growth rate and the profitability within this industry will also be making contribution to the operation of the Gold Leisure Limited. Last but not least is the threats. As I've mentioned earlier on that Gold Leisure has many businesses in overseas, so a huge and sudden tax exchanges or rising in the interest rate will cause a lot of troubles to the Gold Leisure Limited. As such, a rising cost of raw materials from those different countries will also affect the operations of Gold Leisures as well. And next, I will be moving on to the technical analysis. So start off with the Bollinger Band. Um, from the Bollinger Band indicator, we can see that the stock of Gold Leisures actually performed quite well. Since there's a constant increase in the price movement, and from the latest price movement, is actually moves downwards to the lower band, across the lower band, which actually shows a buy signal to the investors. And from the MACD chart, it also shows a buy signal to the investors, whereas the RSI, it shows that the stocks of Nickel Closure is actually overbought, which which tells us that Nickel Closure has experiencing sharp upward movement over a short period of time. Okay, so for the forecast and recommendation, by using the simple moving average models, given 30 days horizon, the value of Gold Leisure Limited on the next trading day is expected to be 81 cents, which is same as the projected value. Whereas from the latest recommendation, stocks of Gold Leisure is currently outperforming, which shows that the stock is expected to do slightly better than the market returns. So in conclusion, my suggestion is that do not invest in Gold Leisure stocks. Although some of the indicators have shown that has shown a buy signal to the investors. As I've mentioned from the fundamental analysis, most of the time Gold Leisure is actually underperformed due to the low ratios and returns. So it shows that it is not a good suitable time now for investors to invest in it, because currently the profitability of this company is actually deteriorating. So that's all from me. Thanks for your kind attention.